Hello everyone, I'm Shivang Mehta. Today we are going to do a technical analysis of Wardwizard Innovation and Mobility Private Limited's right issue. So right issue has been open on 7th Feb and it has been available for the existing shareholders at 20% discount. So let's see the prospects of this right issue and should you subscribe or not. So let's go in detail. First of all, about the company. So Wardwizard is engaged in the business of manufacturing electric vehicles and smart technology based electronic appliances. The company electric vehicle segment is under the name of Joy e-bikes, you all must have heard, and the electronic appliances are under the brand name of View. Wardwizard is the first ever BSE listed company in the EV segment. Joy e-bikes is one of the leading brands in the electric vehicle segment of two-wheelers, and 9 different models varying from low speed and scooters to high speed bikes are available. So you can make out the product portfolio is of the company is quite diverse, and companies is looking forward to increasing its volume and creating a demand for the electric vehicles in the Indian market. Company has more than 2000 plus dealership distributors touch points across pan India. So from this also we can make out the reach of the company and the reach of the company to the remotest area of the country, and company is a manufacturing plant that can produce 4 lakh units. So we can make out that company has the potential to cater to the orders if they come up in future if possible. Coming to company's financial, so in last 1 year company has shown almost double its revenue from 182 crore to 581 crores. It almost like 3 times jump in the revenue over 1 year. Gross profit margin has also doubled in a year. Operating income has moved by 1/3 in a year, and net income has also been strong for the company. So we can make out that company has no interest or tax liabilities, since operating and net income has not much different, as it is less than 10 crore. Coming to the right issue details, so issue will be open on Feb 7 and it will close on Feb 28. So we have plenty of time to analyze that we should subscribe or not. Issue size is of 0.6 crore, so it is a small ask from the company in terms of shares. So 0.6 crore shares will be issued. Issue size is 48 crores. Issue price is 82 crore per share. Face value is rupees 1 per share. Minimum lot, market lot 1 per share, listing at BSE as we already know. Now coming to the terms of payment in the right issue, this becomes a really important point of analysis for the investors. So 50% of issue price, that is rupees 41 per right equity share, shall be payable at the time of application, and the balance of 50% of the right issue, rupees 41 per right equity share, shall be payable in one or more subsequent calls as determined by the board from the time to time. So basically at this point of time, existing shareholders who subscribe for the right issue of the company only has to pay 41, and in future if company calls for rest of the money rupees 41, then existing shareholders has to pay. So this can be an exciting a exciting point for the potential investors, since they don't have to make whole payment at one time. Entitlement: 3 right issue shares for every 2 fully paid up equity shares held on the right record date. So the ratio of the issue will be 3:2. So bid will be open from Feb 7, closes on 28 Feb. Record date will be 22 Jan. This is very important. The main shareholders which will hold shares on 22 Jan will be considered for the allotment of right issue. Deemed date of allotment is 28 Feb, and renunciation of rights entitlement will be 14th Feb. Objective of the right issue: for working capital purposes and general corporate purposes. So basically, as we know, this is a capital intensive industry, and the operating cycle of the company is quite long, since it is trying to establish or trying to create its market in the new field. So working capital requirement of the company is high, so company has to cater to that financially. That's why company is raising around 48 crore from the market. Coming to the stock performance of the company in last 1 year. So at this point of time, company stock is trading at 83, and it has been ranging between rupees 62.97 in last 1 year. So 52-week high is 86, 52-week low is 80. So we are seeing that company stock is not that volatile. So this creates a potential for the stock to move ahead and create wealth for the investors. Market cap of the company is around 25,000 crore rupees. Moving forward, quarterly results, if we see from March 2019 to December 2021. In March 2019, company sales was zero, which moved to 58 crores in December 2020. December 21. So in over 2 years, company has created around 58 crores of sales. So as we can make out, expenses are also quite high. It stands around 53 crore in last quarters. Operating margins have turned positive for the company. So this can be, a point for the investors to consider, that it has moved from minus 0.08 to 4.33. So it is almost 400% jump. Moving, company has zero interest liabilities, so we can make out that in future, if company sales goes down as well, there won't be any drastic change in stock, since the fixed liabilities of company is zero. Profit before tax company stands as 3.88 crore, and we can make out that it has given over 4x return in 1 year, from December 2020, 75 lakh profit to 3.8 crore profit in December 2021. EPS of the share has also turned positive over the time, from minus 0.01 in March 19 to December 21, 0.11. This is also a positive point for investors, since they are seeing the real returns from the company now. Shareholding pattern. So major shareholders of the company are still the promoters with 71% stake. So they will be, they will be taking all the decisions. General public has 19% share, and others have 8%. Others mainly consist of domestic institutional investors. Foreign institutions just hold very minority stake of 0.04%. So short-term stock performance, if we see over 1 year, so company has given drastic returns of 43% in Feb 2021, but after that, consistently for 5 to 6 months, company has given negative returns. Then again 16% return in September 2021, and from there on, company has been giving positive returns. So we can make out that after company has turned profit and EPS of the company has turned positive, company has been giving positive returns from the last 6 months. But in Feb 2022, due to economic factors and pull out from the foreign institutional investors, company has given negative returns of 6%. So now the question arises, should you subscribe or not? So right issue can be subscribed for long term, since it is issued at a discount at rupees 82 for long term investors can consider, but leveraging for subscription is not advisable, and short term traders should avoid, since there might be flood of stocks in the market upon right issue, leading to the short term decline in stock. Hope you find this video useful. Thank you.